What's going on, everybody? Time for another YouTube recap. So let's get right into it. As we like to do, we start on the X, where I post some free calls every once in a while on the page. If you want to give us a follow and check us out, links in the description. And it's Garage Trader 33 if you want to give us a follow. So this morning, very early, about 4 or 5, usually wake up at about 2 in the morning, start watching futures. Posted up in the Discord that we had a nice little long support MACD line, a little scalp heavy there. So we posted up in the Discord, and we had a gap on the 1 minute. So you can see right here, NQ had a gap in price action on the 1 minute, which continually becomes an algo pop magnet a lot of the time. And we had some really good catalysts for this one. So we called that one out pretty nice in the Discord, nice and early. And then we gave some freebies out to the friends on X here, where I came in. It's impossible to see up here. There we go, ish. I gave out a free short here on Qs, and I said it was going to come down to the yellow VWAP, dump out of the gate here. 490.70 at the time of the VWAP here in the yellow is what we were going to come down to at the opening range as well. So let's get this back to normal here. It's another one of the calls here that we just posted out. It's just on the low, high, lower, low break on trend on the way back down. Worked out really well. I did post some live trade commentary here that we had done here on X as well. So if you want to check out some live trading, it's right there. For example, there's 2 different videos today from this morning that capitalizes on some of these plays. Now, with that being said, let's get into exactly what we've seen, right? So let's get to the proof in the pudding first and foremost here. So here's that QQQ anchor VWAP, and I'll explain why we called shorts to this bottom piece right here, because this is a huge over under, right? So we had the lower high, lower low set up here in pre, and we started breaking down. MACD started crossing roughly 7:30 a.m., obviously after the jobs data. And that's what we said after to get some downside. And this is a non-tagged anchor VWAP, right? So anchor VWAPs, you pick a candle, pick a place, and we have some very specifics that we use as far as picking these, so that I'm not going to get in too much. But we had a no tag algo system here on this one for 2 days, which becomes a very strong magnet for a play like this into data and after the wash day that we had seen yesterday. So that was our first call, and we slammed her down about 30 some points into this. And then we had some really good calls intraday on the algo and data candles, right? So we used TOS for that. We're going to get into that starting with NQ. Now, this was a chop fest today. It was a little disgruntled. The market was a little iffy. Q's actually traded slightly better than SPY did, which generally does not happen, but nothing's guaranteed in the market, and anything can happen here, right? We just got to be prepared. So what I like to do, as always, if you're familiar with the channel, we fib out the Fibonacci box. This is the 5-minute chart, high, low, pointed the extensions to the downside, 1618, 2618, and 423.60. And we came in between the 2618 and 423. And this tells you a lot about the day, is finding random supports there, double bottoming low a day, and yesterday's close, right? And that's a pretty big one, fine, but still Fibonacci should be much cleaner than this little mishap here, which could have been just an algo drain news that I wasn't aware of, but I wasn't trading through the afternoon. But let's take a peek at the opening range as I posted some of these live trades. As you've seen, we took some bounce points here at the 200. So we came out of the gate, right, 8:30 a.m. Central. We got kind of caught, not really caught in this little area, but it pushed down on QQQ to the 200 and then had some snapbacks, right? But let's take a peek at the Fibonacci here. That Fib box is pointed to the downside, and as we just discussed, the 1618 right here at 20,354.61, right? And if you notice, that Fib box kind of came out of the range, golden pocket. This is what we call the in-between 3820 to 61.8, right, on the Fib. Snapped outside of the range, came, wiped out the 1618, almost into the 2618, popped into the 2618. Okay, well, after the 2618's hit, we have a very high percent chance, nothing's guaranteed in the market, to bounce here. So we came into that 2618, came all the way back, pushed through that 1618, and then generally went back to Chop Fest, and that was when we swapped to ES. So I want to make that very apparent that we had a very clean algo setup right here, and I want to take a peek at it on Qs, because obviously futures don't close through the night, but only 1 hour through the week. And let's see that, and the QQQ opens up much later. All right, so again, this is this trade, and you're going to see this in live, so you can check out the YouTubes here. We have 2 live trade examples. We got caught a little downside. It was manageable. Not that big of a deal. Let's get to the 5-minute chart here. And what we did was we played the counter trend bounce on the first tag metric. And I'm really big on first tags and magnets when something shies, okay? And a shy is this. These are moving averages, and this is one of my loves in the market, of course. This is yesterday, okay? Price action opened up for the day, bloop, right here. This is the 666 SMA. This is the 200 SMA, and this is the 100 EMA in the green. Okay, 666, 200, 100. Notice yesterday they all have something in common. Price action never got to them, right? We never tagged him. So when something like that happens, I generally look to see later on in the day if we get like a retrace or a reversal, we'll have an opportunity to see those back tested at some point, right? And if we don't get them in that same day, like something like this, where you see just a burden of algos holding this price action down, we stayed in the bottom channel of the RSI the entire day. We had a MAC cross here, and it just never bounced until way late towards power hour, which is fine. And now that gives us a cool setup for the next day, right? So because we never tagged any of those moving averages from yesterday, let's delete these fibs. We can see the moving averages a little cleaner. Our first tags were going to be, and this is what I'm talking about, first tag is when the price action first tags into that moving average for the day. Now, we had a couple different awkward ones here on Qs and SPY we'll go over. And we utilize QQQ and SPY, but we trade NQ and ES off of the ETFs. So it's always better to do that. Now, this open up right here, you can see finally clicked into the 100 EMA and washed. So the live trade example was I was getting long and I wanted to hold the 100 EMA, push up into the data box that we had just drawn for the fibs, get a little tag and come back down, because ultimately our metric was short for the opening day. And macro, if we are underneath, per our last YouTube video, which I'll link in the description, underneath the 10 SMA daily closing, we are in danger of coming down, as we posted on Twitter on the dump day, right? Or X. So the moving averages are now tagged, right? And then we also just got this ugly, really choppy, just unfun clean day, right? Unclean day. So the moving average tags, now remember these things on no tag days, the next day that they come over are pinnacle support resistance. They become really, really strong over unders, right? And Q's always slips moving averages, right? And ES does not, but we'll get over to that. But these were really good momentum hitters where today each piece was going to hit. Each moving average had a really high percent chance to hit. So at the open, we hit the 100, 200 is right here. We chopped the whole morning. And I told my crew before we left on the premium Discord, ES needs to go up today to the 5-minute 100 EMA. We'll go take a look at that in a minute. But the Qs came all the way down under the half candle retrace into this deep zone here, recrossed, and then finally just now in power hour hit the 666 which we had just mentioned needed a tag yesterday. So they all worked, and I'm sure a lot of people didn't see this coming, but moving average magnets, they're so clean sometimes. And I have a full premium lesson, and we stream this live every single morning on how to handle these and do it nonstop. So it's pretty awesome. Let's get into SPY for a little piece of this recap here. So ES we swapped to after we made some good ching on NQ this morning because everything was just looking a little choppy. I wanted to go back to ES because that is generally, not even generally, it's always a lot better of a trader more often than not. So let's take a peek at some of these shies. And I want to go to the 1 minute and we're going to discuss moving averages again, because conformationally moving average tags and magnets are very big for my strategy. So when you've seen little things like shying, right? Price action opens. We're nowhere near the 100 EMA 1 minute. It comes down, push, comes up, shies, no tag. You got to look real close there, but that price action does not hit that green line. Price action has come back down, right? And what do I say all the time? Market, big things come in threes. 1 down, 2 down, and then we had a little bit of a 3 lower high. That was a little scammy, but still we had another low. So we had 3 lows, okay? And things love to come in threes in reverse. So 1, 2, 3. And this is a really ugly charting. It was not a good chart day, but it still happened, right? So after the 3 push, boom, into the magnet of the 100 EMA. Great. Now we swapped to the 5 minute because that was one of our long trades that we had called, right? And before I left, I was saying that the 5-minute 100 EMA has to hit at some point today. Just watch for that reversal. And we have to get into the oscillation indicators here to help us out with this one. Okay, so again, the opening dump, you notice that we washed right through the 200, and we're going to use this as a back test confirmation as well. So the 200 SMA is this salmon peach color, green is in the 100, VWAP is the purple. And when you see this open right here, it washes right through the 200 SMA without any remorse, right? Hits a fresh low, boop, magnets right back. That's confirmation of weakness, right? Breaks level, back test level as a moving average, double top, fail. Well, why was that such a short bias move? Well, let's take a peek. The RSI is in the bottom of the channel, right? So trend low. MACD is in the bottom of the channel. Large sell wave, smaller buy wave, indecision, bigger sell wave. But the MACD is a lagging indicator. So by the time it was putting in big beat waves here, it was pretty much already dumping, but you couldn't really catch that. But now the 100 EMA shy, you can see here again on the 5-minute chart in the green, we didn't quite get all the way up there. So our thesis was she'll come back at some point today and bang into that 100 EMA. All right, well, it finally happened, and I said it was going to be after about 10:30, 11. That's when the Euro algorithms closed, and that's what I told my team on Discord before we left. Here's 11 a.m. Central. Here's the reversal. It's usually in between, somewhere between 10:30 and 11, the algo shut down, and then you're either confirming trend or reversing trend, and today was a reverse trend. So we got a fresh low, and you hear me say this all the time, fresh low, fresh high. The algorithms love hunting for those stop losses, right? That's why we use a hard open close stop out system when we trade live. Okay. And what I mean by that, if this is low of day and I'm planning a long, right, for this nice little MACD cross that we got, the RSI is higher lowing, we got volume coming in, and we have a 10:30 to 11 euro close, which can help change direction. I would not stop out of a long trade here until a candle was fully developed underneath the low of day. And that's what that looks like right here. Not because something pushes into the lower day. You guys can't be stopping out on crosses like that. Something just crosses over lower day and sets a new day low. You need a candle that is opened and closed underneath lower day for a stop out, and that's usually how I call it a hard open close. It hard opens and it hard closes underneath that level. It's not an indecision soft interaction where the candles kind of chop it around and go back up, because the market is so good at stop loss hunting, right? Fresh low reversals, fresh low high reversals, either one are super common, right? So when we are into some oversold metrics, -2 VWAP in the blue, we got the low day, and we finally got the macros, we got to be thinking long, and we have a target of the 100 EMA when I left the crew. So we said again, after 10:30, 11, look for that. It happened at about 11 o'clock. We started getting the base in the fresh low, 11:15, max started crossing, and there's the 100 EMA long push. Now it happened, it just took a long time, right? So through the afternoon happened, our prediction was right. It was just a tangible, chewable trade, right? It was something that could happen, very high probability chance to happen, and we needed to back test, and it did, which was great. We just had to wait for the oscillation indicators, and we had to wait for this messy open to kind of figure itself out. And after 10:30, 11 algo close, it finally did. So with that being said, let's take a peek at the daily chart real quick. Oh, I'm going to cover the VIX actually real fast as well. So the volatility index this morning, and again, you can check out my live trade examples, and I'll post those in the description, or just check out the channel, and it shows me live trading the NQ scalping, which we did. So this is another thing I told my team. This is one of the biggest parts of the push down. Okay, this is an unnatural gap open on VIX. So the volatility index closes at 8:15 Central, opens back up at market open. Okay, so 8:15 closes out, 8:30 shuts down for 15 minutes and opens up. Now, the volatility index does not usually gap like this unless we have some precursor for news, something where something happened in the pre-market that had caused the market to move extremely large, and then the VIX could end up putting in a small gap of some way or the other. So a lot of the times you'll hear me talk about gaps, and I'm very, very, very adamant on gaps. It's data that needs to be filled, and the VIX can be used for it. Anything can be used for it. Gaps are the most important thing on my chart. So when we see the volatility index have an unnatural gap up at the open, I told everybody this is extremely, you'll hear me in the live trade, go to the live trade examples, and I'm like, oh my God, you guys, this is worst case scenario. This gap and go for the VIX is here. And I said that right at open before any of this happened. So you can check the video live. We did it live. We commented on it live, and that shit is just scary. So when the VIX had that gap, I said, all right, well, yesterday left a 5-minute gap in price action. So that can become a magnet for price action. That is right here at $19.85. There is a gap, right? All black in between, no wicks, none of that stuff. And seemingly it is right next to another one. So we know generally right around this $19.80 So there's some interesting algorithms happening, right? And that was the truth as we opened up, right? It came into the gap up, it had the gap and go, and what did it do? Track down $19.85. So the gap and go, push back up, nailed it, little exhaustion up, and then back down for that SPY 100 EMA to rally back up is where the VIX topped. And standard deviation, as you notice right now, these lines are not aggressively angled to the downside. Notice this blue line, this red line, the yellow line. So we use standard deviation on the 5-day calculation on the volatility index, and it tells me a little helpful on trend. And when it goes this far outside of the range, generally it cannot hold, right? So +3 is where you had seen it yesterday. You're almost +4. At the end of that day, washing like that, it cannot generally hold that without, again, outsourcing catalysts. We need something that's hype, fear, greed, news driven, something, right? And we didn't have anything for that, so we cut back down. Same thing as today. We had a gap and go, which we had called up, pushing back down, and then it relaxed and finally went for that 100 EMA. But if you look at the volatility indexes opens and you just go back in time and look at how some of this stuff opens, they open with small gaps all the time that usually have insta-fills, right? This one wasn't a gap right there. That one opened up directly in line. You look at the next day right here, we had a gap open. Here's the tick, right? 815 opens up here, falls, and then rallies back. But we know because the volatility index leaves the gap open, runs away, that it can retrace to that gap and fill. Doesn't have to do it same day. It's just a precursor that we look for, right? So when the VIX shows us small gaps, we have a trend direction to look backwards on. And this is a larger one right here. So again, close down, opens up here, gapped up. So what does it do? Walks itself back down, chases the gap open to close it down, okay? And that's when they're manageable. The gaps are generally small. Notice today's gap. Right when I said it, when I see it, I'm like, oh, schmoly, right on the record. I was like, this is something else. We're going to hold this gap. We're not coming down. We're going to rip rally up. And that's a gap and go style right there. That is too large to have that big fail. Now, again, nothing's impossible in the market, but that is a huge gap. Okay. Huge, as the Trumpster would say. So, that is one thing that we had to take into consideration as well. So let's get to the daily chart on the SPY. Let's look what we're left with, because we said we have determining a loop right now, because we talked the last video about the 10 SMA loop, and when price action goes underneath and loops back up for that high, right, we can do it. Now, we've already produced a couple of loops here, okay? And generally, you know, after one or two, it does get exhausted, but on some of these bull runs, you notice that these loops after recovery can happen a few times. It's not a loop right here. That's consolidation push. One loop, slight loop two, and then finally gave up underneath the 10 SMA. Recovers 10 SMA, push, bigger loop, and off we go looping the 10 SMA as we talked about in the last breakdown video. Now, getting into this loop, is this the one that's going to fail, or is this going to pick right back up and start pushing to the highs? Well, that's our job to, as traders, to decipher, right? So right now, looking at the smaller sideways in the MAC, we are getting some MAC cross lines, but it's not super bearish yet. We are getting a little bit of that lower high breakdown, but we are starting now to form buy up candles. We're still waiting for tried and true direction at that 10 SMA. And just because we had a little bit of a cut down day there, the 23rd, and then today, 24th got picked up on that higher low, doesn't mean all that much. If we now open up above, right, comes back down, cooks, and then we start getting over that 10 and pushing again, well, we're just back to bullish narrative. Now, this loop, right, I'm looking for it to fail. So regardless if it fails at the all-time high fib or this red candle we've been using on the October 15th, what that means is price action will come down, come back up into those resistance points, and that's where the lower high is going to be, and we'll get a nice close under that 10 SMA, and we'll get a cut back down. We're still kind of looking like that. We're slightly leaning to the short side. Right now, no guarantees here. We're just going to follow it day by day and see where we end up, because obviously there's day traders, and as futures are open all over the market, causes the gaps on SPY. You know, we're going to see what happens. Now, Qs, on the other hand, got the daily chart breakdown here. And again, same general. They're moving pretty close. But this October 15th candle, this is one that we don't have any data on. Again, we talk about the high-low fib range in the box, and we left data where price action, right, does not go to the top of this candle, okay? So we pushed up in the giant gap up day in the engulfing. That was the guaranteed short. Comes down, but we never came back up and matched highs with October 15th at 498.48. We did create a lower high, and then we had a fresh high reversal, right? Beginning of the video, I'm talking about how the market likes to scam you by pushing into highs and then completely reversing. Well, it's known to do that, right? Look at this right here. Pushed into highs outside of sequence, and then whomp, right down, okay? Now, we're still looking for over-under on the 10 SMA daily, right? And that's going to come, hopefully, fruition tomorrow or the next day. And I don't care if we get another little choppy inside day on the 10, but something's got to give for direction here, because right now the oscillation indicators, if you take a peek, get out a little bit there, they're looking a little consolidated weak. we're getting those fresh lows here and a little bit on that RSI. And if this pops up one more time in price action, does a little bit of a loop on the 10 like we're talking, finds equal resistance, we will start heading back down because this indicator on the RSI will start to break through. MACD will start to stretch its legs to the downside, and hopefully we're up near highs when we identify that short, and we'll have a chance to come down. So if any of that sounds good to you guys and you want to trade with us live, we have the link in the description. We do this live every single morning. You want to support the channel a different way? I got Apex funded trader codes, which we post a lot on as well. TG33 get you a nice big discount, and I get a little bit of kickback for doing all the fun stuff on YouTube. So please tune in for the next one. We'll catch you then.